I'm Thomas Hunt from the World Crypto Network, and here are today's Bitcoin headlines. Crypto scams on the rise and can still affect Bitcoin's price by Antonio Madeira in Cointelegraph. Plus Token is not behind the recent Bitcoin price crash, but as scam activity peaks amongst the pandemic, they may still affect the market. Bolstered by the new coronavirus pandemic, scams continue to be rampant in the cryptocurrency world, from malware to fake investment programs and even fake donations to health organizations. Scammers are known for taking advantage of desperate times and desperate people. One of the most prominent scams in the industry, Plus Token, has come under the spotlight again after rumors emerged that the March crash was caused by its operators selling their stolen Bitcoin. According to research by Chain Analysis, a blockchain analysis company, Plus Token did not cause the Black Thursday sell-off of March 12th. In a recent webinar, Chain Analysis sought to bring clarity to the impact of the COVID-19 pandemic on cryptocurrency markets by analyzing key points in on-chain data, such as exchange inflow and more. During the presentation, Philip Gradwell, the chief economist at Chain Analysis, addressed a somewhat common opinion that the crypto market crash that happened March 12th to March 13th was caused by Plus Token liquidating the Bitcoin acquired through its Ponzi scheme, which came to around $2.9 billion, according to Chain Analysis. In the webinar, Gradwell stated, "We can also dispel another theory that has been going around, that Plus Token selling triggered the price decline. We actually don't think that's the case, because Plus Token had largely cashed out before early March." According to Chain Analysis data, Plus Token movements to exchanges decreased severely before the crash, which indicates funds were already cashed out. A noticeable amount of 12,423 Bitcoin, worth $123 million at the time, was moved to a mixer or cold wallet on February 12th, followed by a similar amount in early March. It's possible that the Bitcoin was cashed out immediately to avoid exchanges freezing funds. Not the end for Plus Token. Plus Token may still have 61,229 Bitcoin, currently worth around $420 million, according to a report released by OXT Research on March 10th. While some Bitcoin has been sold after the crash, low prices seem to discourage those behind Plus Token from selling, if they are still in fact holding such large quantities of Bitcoin. It's also possible that the Plus Token operators may be waiting for the Bitcoin halving to capture a higher price. According to Chainalysis, volumes prior and to during December 2019 were much higher than those observed in 2020. The accentuated inflows were discussed in another Chainalysis report where it took another stance on the Plus Token and Bitcoin price-related, saying at the time that the sell-offs from Plus Token were keeping Bitcoin prices down. Although Plus Token has largely cashed out, there's still a chance it will continue to affect Bitcoin. According to Kim Grayer, the head of research at Chain Analysis, a large sell-off by Plus Token could bring down the price of Bitcoin in the future, especially if the liquidations are executed irresponsibly. She told Cointelegraph, "We found that in the past, large inflows to exchanges, such as those from Plus Token last year, tend to increase the price volatility on exchanges. This problem can potentially be exacerbated by trading bots that pick up on those on-chain movements and execute trades, not to mention the highly leveraged positions on derivative exchanges that can get liquidated rather quickly. But overall, prices tend to bounce back quickly from those one-off events." Plus Token, a crypto scam unicorn. Plus Token, now known as the biggest cryptocurrency exit scam in history so far, was a 2019 Ponzi scheme that defrauded investors out of $2.9 billion in cryptocurrency assets by posing as a South Korea-based crypto wallet project that offers depositors interest in crypto, a practice that has become fairly common in decentralized finance applications, centralized banking applications, and exchanges offering margin trading. Plus Token explained that its high interest payments would be generated by exchange profits, mining, and referral programs. Short-sighted by the promising gains, over 3 million users registered with Plus Token. The scheme even announced that it expected to grow to 10 million users by the end of 2019, shortly before it exited with depositors' money. In China, Plus Token was quickly exposed as a Ponzi scheme when 6 individuals were arrested by Chinese authorities in June 2019, with reports connecting them to the Plus Token project. Cointelegraph reported on the incident at the time, but it was in August 2019 that the cybersecurity firm CipherTrace released its second quarter cryptocurrency anti-money laundering report that confirmed the connection to the Plus Token scam. COVID-19. Crypto scams on the rise. Interest-generating products have been gaining ever more popularity in the cryptosphere, including MakerDAO's decentralized protocol, which according to a report by DappRadar, saw peak activity during March, and other centralized options such as BlockFi's banking app or Binance's lending services. Although crypto has always been prone to illicit activity and shady ventures, the relatively high interest rates practiced in these services may have helped normalize Plus Token's profit claims, easing unwary investors. Similar models have been seen elsewhere. In August 2019, a cryptocurrency wallet project from Nigeria called Sato Wallet allegedly made off with $1 million in a smaller-scale exit scam. Last year, another Ponzi scheme promising returns from cloud mining also made headlines after pulling off a $200 million exit scam that later resulted in 14 individuals being arrested. An increasing number of topical crypto schemes have surfaced since the worsening of the coronavirus pandemic, from fake donation campaigns for the World Health Organization and the United States Centers for Disease Control and Prevention to fraudsters impersonating officials from these agencies who can sell information on active infections for a price, paid with Bitcoin, of course. Now more than ever, cryptocurrency holders need to be wary of crypto scams. The U.S. Federal Bureau of Investigation recently issued a press release in which it warned of the potential increase of cryptocurrency-related fraud schemes during the COVID-19 pandemic, adding, There are not only numerous virtual asset service providers online, but also thousands of cryptocurrency kiosks located throughout the world which are exploited by criminals to facilitate their schemes. Many traditional financial crimes and money laundering schemes are now orchestrated via cryptocurrencies. Although tough times create a perfect chaotic setting for scammers to operate in, it's relieving to know that despite the increased activity and novel coronavirus-related scams, revenue for crypto scammers fell by around 30% in March. Despite taking on new forms, cryptocurrency scams are almost as old as crypto itself. For example, OneCoin, one of the most prominent names when it comes to cryptocurrency-related scams, was founded in 2014 and is still making headlines in crypto media. Although OneCoin has been sued, the lead plaintiff for the ongoing $4 billion class action suit against the project, Donald Berdu, has repeatedly failed to meet the court's monthly status reports, which may lead to the case being dropped. Can illicit exchanges stop illicit transactions? According to Chainalysis, most of the funds moved by the Plus Token scam were liquidated in 2 Asian exchanges, Huobi and OKX. This has raised some concerns about exchanges' know your customer practices, which do not seem to be useful when it came to spotting or censoring the transactions from Plus tokens. Although other sources were used, they were small in comparison to the inflows to the aforementioned exchanges. Groward stated that Chainalysis had found traces of funds at mining pools, mixers, other scams, and P2P exchanges, but the paths were too small to be interrogated. If cryptocurrency schemes are to be stopped, exchanges should ideally act as a final barrier for illicit transactions. Responding to past criticism, Huobi is aiming to improve its security measures by launching Star Atlas, an on-chain monitoring tool that can identify crimes like fraud, money laundering, and other problematic activities. Moreover, WhoBuy is also looking to partner with data providers like Chain Analysis and Crypto Compare to build a more transparent and compliant ecosystem, a measure that will surely be essential for the institutionalization and regulatory compliance going forward. Ciara Sun, the vice president of global business at WhoBuy, told Cointelegraph, "While we may be able to identify illicit activities once they reach our exchange and prevent their outflow, we can't yet prevent illicit transactions that start outside of our platform. However, we believe that collaborative efforts amongst industry players, included but not limited to information sharing, are the key to success to create a safer, friendly ecosystem for the crypto industry to grow." While efforts to reduce illicit transactions are being undertaken by exchanges such as WhoBuy and Paxful, users should always be aware of possible fraud attempts and conduct meaningful due diligence into any project they are willing to trust with their coins, as it is unlikely they'll get them back once lost. This has been Crypto Scams on the Rise and Can Still Affect Bitcoin's Price by Antonio Madeira, writing in Cointelegraph. Thank you for watching Bitcoin Headlines. My name is Thomas Hunt. Remember to like and subscribe. This is the World Crypto Network.